All right, welcome to Coffee Cafe. All right, we're going to get started with this class project, which is going to involve a lot of the concepts that we learned throughout from chapters 1 through 12, and we're applying it into this fictitious business. Right, yesterday I've introduced to you what materials we need for this class. So again, every day I'm going to be posting the link of what you need to have. So in this case, we are going to be practicing how to journalize. So that's the first thing that we need to have is our journals. Okay. We need to have our chart of accounts so we know how to journal lies, right? Check out our chart of accounts to kind of give us an idea of what accounts I need to use, right? So that's part of the steps of transaction analysis is looking at a transaction and understanding how to organize it and sort it to by using the chart of accounts so you can journalize it. Okay. Other things I'm going to be introducing to is now this is what it's normally supposed to do, right? The accounting cycle is you got your source documents, right? You're going to analyze your source documents and then you post it to the journal and then you post it to the ledger, right? In this case, the best bet or the best kind of order, or in this case, to give you the best results, after we journalize something, I much rather have you go ahead and post it to the general ledger. So that's something that we are going to be talking about is your general ledger, which is a list of all of your accounts and it has all of the account balances in each and every single one. It's if you're using Excel, it is in order by account type, okay? And they all have account numbers right here and then the account names right here. So it's not too difficult to have to search or anything like that. Just because the accounts that we use, there's not that many, I would say, but this is just looking at a very small scale of a very small business. So making sure that, you know, whichever method you want to use to look up your accounts, go ahead and utilize it. But for me, we have plenty of time. We can just scroll down and locate them because, again, there's not that many accounts. So you're going to notice this. If you check out your chart of accounts, you have things in capital letters and then you have things in lowercase letters. Your capital letters are going to be your main accounts, okay? Your lowercase letters are going to be sub accounts, okay? Sub, or it could also have contra accounts in here. So for example, the bank, if you look at the numbers too, the bank is 10,000, right? But notice that it's 10,100 your checking, 10,200 your petty cash, 10,300 your cash in register, and then it starts to move on to another main account. So in essence, like you can kind of see the sequence numbers here. You could kind of tell that these three things, the cash, the checking, the petty cash, and the cash in the register, they all are going to be things that equal up the bank, right? If you remember back in chapter 2 when we talk about the main accounts and we talk about how the sub accounts make up the main accounts, it gives the main accounts more detail. So this is the example here. So what I'm going to have you guys do is we will be practicing to do trial balances, okay? Where we take every single account that exists, right? And we're going to piece it together and we're going to test to see if their total debits match the total credits. That, for instance, I'm going to have you guys practice just getting used to just plugging in all of your accounts first. And then as we progress down Coffee Cafe, then I'm going to ask you to be, if you're able to do your trial balance using the main accounts only. Okay, so again, it's a lot of, I can tell you this, Coffee Cafe is a lot of work. Okay, it is not the easiest concept or things that you have to do, but it's definitely something that I am gonna, have you guys practice and practice and practice until you're able to be going on your own. So again, the first 2 weeks, I'm gonna be showing you how to be able to go through the scenarios and using the transaction analysis, as well as using your accounting model, right? Your accounting model is the one with the increase and decreases, okay? That's going to really help you be able to understand how a transaction should work, okay? I'm going to go through that with you guys and also go through other things. So another thing I'm going to introduce is called the subsidiary ledger. The subsidiary ledger, okay, is going to consist of the people that are involved um, in your business. So you have your customers, you have your vendors, and you have your employees. Okay, so or people, and then you also have people who work for you. So that's going to be something that you want to consider. Is you have you have your customers, your vendors. This is a way that we can keep track of them, especially when we issue them out some bills, right? And let's say we give them terms. It's the best way to keep track of them and to either receive payments or pay them on time, right? So this is in essence going to give you a track record of all of your accounts receivable, all of your accounts payable, and all of your payroll expenses. Okay, that's the subsidiary ledger, and we are going to be using it throughout the entire time, because every time we talk to a customer, every time we talk to a vendor, your best bet is, if you're going to journalize it, you should also keep it a good track record in your subsidiary ledger, so you know who are the people you are involved with in order for you to be operating your business. Okay, so that's something that today I'm going to be introducing you to. So talking about the general ledger, so one thing is that if we are going to be journalizing, what I want you guys to do is post it directly into the ledger right after a journal transaction. You can think of it this way. Normally, you're supposed to do it at the end of the week before you do your trial balance. But what I've noticed is that you're most likely going to make a lot of mistakes if you wait till the very end to do it. Now, another key thing is your checking account is one of those ledgers. You should always have a good track record of your checking account. You need to know how much money you have in your bank at all times. Okay? So again, your checking account, you should have an idea of how much money you have in your checking account, right? Because you definitely don't ever want to accidentally write a faulty check when willingly knowing that you don't have enough money in your account. Okay, so that's the idea here, is that you should be able to keep a good track record, especially for your checking account, because you need to know the one thing and the one thing only. Do you have money? If you have money, then you can go buy things, right? And when you earn money, you should deposit that into the bank. Okay? So that's the idea of this. So if you're going to be updating your checking account, then you should be updating every other account, just so then you can avoid making those mistakes. Okay. So as I've mentioned, so here, if you're working on this journal here, we have a calendar of how everything's going to be going. So if you just take a look overview here, we got a payroll period. We got when we actually start getting Coffee Cafe ready. When do we actually start selling our products, or when we actually open our store? Things like that. When does the discount end? It ends on 1 week later. and things to like ending of the month. You need to make sure that you wrap up your accounting period. So here, Friday, we got payroll, payday, so etc., etc., right? This is helpful for you in case you need a visual of where and when we're going to start our operations for Coffee Cafe. Okay. Again, chart of accounts I've already introduced. General journal, right, straightforward. We have 27 pages, so making sure that we go through them in an orderly manner, right? We're going to be practicing using the check register, right? Putting in things such as, the date, why, who are we paying, and why are we paying them, okay? So, and then we have deposit. So when we receive our money or we receive a check from our customers, that we deposit the money right away in our checking account. Because, again, as a business, you should, manage your money pretty well, okay? You receive money, you should deposit in your bank either the same day or at least within the next few days so that you have constant cash flow, right? And we have a new feature, or not a new feature, but purchase orders, especially when your company, right? This company that you're working for doesn't have that many employees. So you should be very, very highly responsible for, if you make purchase of things, keeping a good track record of receiving those purchases. Okay, so that's that. We introduced the general ledger and we introduced the subsidiary ledger. Okay, this isn't where it stops here because we still have a couple more other forms that are still currently that I haven't talked about. Obviously, depreciation we won't talk about till the very end of like maybe the last week of class, and then the financials forms. We will be actually looking into that when we reach the end of every Coffee Cafe week. So every 7 days, okay, every 7 days, right? I am going to require you guys to complete a trial balance. This is just so that we can do a quick summary, making sure that we are constantly doing the accounting correctly, right? To ensure the accuracy of your accounting. Because again, you can make mistakes here and there. And it's better to catch them early on than wait till the end of the month to do your unadjusted trial balance, and then your numbers are become way off. So that's why we're gonna be practicing how to do the trial balance at the end of every Coffee Cafe week. Not the end of our week, the end of every Coffee Cafe week. Okay? So, yeah. So let's go ahead and get started with our little coffee cafe shop here. So here's something that you need to know that you have for Coffee Cafe is Bob Mason is the owner, okay? And he wants to open a small little coffee shop in his local neighborhood. All right. So he wants to bring the community together by selling coffee. All right. Awesome. All right. And he also gets advice on how to start up his business, and he does his research on the area for rental places. Okay. So he is able to set up his shop. All right. And he asked you to intern for him to help properly keep his books. Okay. So that means we're going to be responsible for managing every single book or all the books. So that means keeping track of all of his income, all of his expenses, all of his records and everything that we need to do, right? We're going to be the bookkeeper, right? So then, of course, he has $30,000 to invest into his company. All right. So again, let's go ahead and set up our chart of accounts and general journals and general ledger accounts, which we already did, right? These are all pre-made, right? I've done this scenario multiple times in classes, so I provide you everything because in this case, right, I'm going to be the accountant, you're the bookkeeper, meaning I make up the rules, I tell you what to do, all you have to do is just simply record, okay? So I provided you the chart of accounts because that's what the accountant does. The accountant is going to be the one who creates the accounts. All right, they're the one who's gonna lay out the rules for how to properly journalize everything. Okay, and but again, what I'm gonna have you guys do is not only am I gonna be training you to become the bookkeeper, I'm also gonna train you to become the accountant. So after 2 weeks of class, right, of doing this with you guys, right, I'm gonna have you guys. We're gonna switch roles, and I'm gonna have you guys tell me what to do for week 3, 4, and 5. Now, of course, week 3 is where a lot of the transactions are going to become, a little more advanced, a little more repetitive. But that's the purpose of this because this is how I am going to train you to be able to recognize a transaction and be for you guys to be able to do it on your own. I'm not going to leave you stranded, so I'm going to be giving you hints here and there so you're not going to be alone. However, I do expect you that every time we do Coffee Cafe, we pick up for where we left off. So this next 5 weeks is going to be crunch time where we actually need to focus on what we're doing and remember the things that we've done before. Okay? Because this is everything that we learned in the last 10 weeks to bring it up to now. Okay? So let's see what here. So after I gave you everything that you need, the chart of accounts, the general journal, the general ledger. Okay? So the first thing that happened was, let me see. First thing that happened was on May 31st, Bob's friend, okay, he works from the bank, okay, and he tells him that there is a small coffee shop business that is filing for bankruptcy, okay, and is currently short selling on the market. So Bob is interested, and here is the bankrupt business's what they have, right? What they're selling to us. Okay, so it went through appraisal, and this is the existing This is the existing coffee shop assets. So it has furniture, right, worth $4,000. It's got a coffee brewer that's worth $1,900, and the total fair market value right now is $5,900. Okay. And of course, you offer, or Bob in this case, offer to buy the business for $8,000. Okay? So that means calculate the total goodwill generated from this purchase of the business. So in this case, right, the business is worth $5,900, right? And Bob decided to not put a down payment, but buy out the business for $8,000. So if you guys remember in chapter 11.6, how much goodwill is going to come out of this? Okay? If I bought the business for more than what it's worth. How do I calculate the goodwill for this? Okay. If I'm buying the business for $8,000, right? We have furniture that's worth $4,000. We have the coffee brewer for $1,900, right? This business right here is only worth 5,900. So how much is the difference? How much money am I putting extra into this business? Anybody? If I buy a business for $8,000 and right now it's only worth 5,900, I simply subtract those two numbers, right? 8,000 minus 5,900. I should get a total of goodwill to be 2,100, right? This is going to be considered because I'm buying into the business, I'm purchasing the business out, right? So therefore, because it has a carrying over amount, because I bought the business for more than what it is fair market valued at, then I generate what's called goodwill. Okay, so this was chapter 11.6. So in this case, right, that therefore I bought the business for $8,000 and now I generated a $2,000 and $2,100 worth of goodwill. Okay. Now in this case, now that I have purchased my business, right? Can I journalize this transaction? Can I properly journalize this transaction?
We could say purchase furniture, correct?
Well, in this case, the question is, so the question is, can you journalize this transaction?
Yes, furniture, purchase.
Well, why? Why can you?
Because we have like furniture, we have coffee.
Well, so is this a business transaction?
It's office, so
What do you? It's a what?
it's not for the office. We bought it. Like we bought things from the home, about the shop business for the home. Okay, and so he bought the furniture for the coffee shop, right?
He bought a coffee shop.
Okay. How about the furniture?
He bought the shop. It used to be a previously owned coffee shop. That coffee shop had existing assets. It had furniture, a coffee brewer.
Okay, okay. No, no, no. We don't need because we didn't purchase this one, like the furniture or the coffee.
Yes, we did. We purchased the business. We purchased this business that had furniture and a coffee brewer.
Yeah, but we didn't a shop is have everything already.
These are just the okay. So we this is the shop that we bought. This is what they had left over at the shop.
And the owner want to sell it to us, right?
No, we bought it off. We bought it from the bank.
So we bought the furniture from the bank, or we bought everything from the bank. Like we bought the shop, and the shop have the furniture inside.
We bought the yes, we bought the shop, and the shop
Okay.
had furniture
Hmm.
and a coffee brewer. And since we bought it more than what the coffee shop is worth, we generated goodwill.
So now we could say coffee shop purchase, right?
Okay, so I'm gonna ask. Okay, so in this case, so you're telling me yes, you want to record this transaction.
This we can't do it as an expenses, but it's gonna be like the purchasing or got the loan. Why we got the loan, or why we got the bank money. I'm not sure how we do journalize it.
Okay, no. That's not my question. I'm asking. I'm asking you. Should you record this in your books? Yes or no?
Uh,
And you're telling
no,
me yes.
no, because when we pay through the bank, this is not in our book. We should be like do it with the real estate, right?
Isn't this a business transaction? You're buying a coffee shop for yourself, right?
Hmm.
So why wouldn't you journalize this?
How do we journalize it? I don't
No,
know.
no. I'm not asking you how. I'm asking you why.
Yeah, we don't need
Why?
because we pay for the loan or the bank, and this is goes like separate, right? I thought when we purchase like something
Right,
from
but you bought something. You made a business expense or you made a business yeah, you bought something for the business, right?
hmm, yeah,
So why wouldn't you journalize this?
because we have expenses, like we spend money on something. We need to journalize it to make sure where is this money gone.
Okay, good. However, we got to go back to our assumption, okay?
Hmm.
As a business or economic entity, right?
Hmm.
Can we make this can we journalize this transaction?
Yeah, we could.
Well, in this case, no, you can't because why? What do you have money in your personal checking account? Can you use a personal checking account to do a business transaction?
No,
No.
we need to open the business account.
Correct. So in this case, we don't have one,
Mm,
but
okay.
we already spent the money. So we need to keep this in mind because that is something that we're going to record later on. So that's where I'm trying to get at here. All right. Yes, you should. If you had the business bank account already, then yes, you should go ahead and open and be able to record this. But here's the thing: if you're trying to open a business bank account, you need to have an established business already before you can be able to open up a bank account. No one's gonna let you open up a bank account if you don't even have a business name. Okay? So in this case, we just bought the bank. It's on we use our personal money to go ahead and buy the bank or buy this
So
coffee shop.
we need to open the business first, and after this we open the business account,
Yes.
not the opposite. Okay.
Yes. How can you open a checking account if you don't know what your business is? If you haven't applied for a business license. How can you open up a bank account?
Yeah, makes sense. Because
Okay.
we need to know the name and the, yeah.
Yes. Okay. So here, the very next couple days here, it's June 3rd, Monday, and we apply for a DBA name, fictitious name, and it cost us some money to change our name. So in this case, what is a DBA? It's called a doing business as name. So this is us filing to the court that we want to change the name of the business because this was a previously owned business, right? We have to, since we're going to take over the operations, we need to go through legal courts systems to actually change the name so we can use it as however we want to use it, right? So that's that right there. So it cost us $25 to change the name for the business. Okay, is this something we can record?
It's cost us $25 to
Yes.
change the business name.
Yes.
Yeah, we need to record it because this is expenses.
Good, but in this case, what was the missing thing that we need to have first?
The account, business account.
Do we have a business account right now?
No.
So no, we cannot journalize this.
So how do we got all these expenses if we like come to count everything, like how much we spend to open the business, as if we journalize it after?
Yes, when you open up your bank account, you're going to have to recognize all the things that you spent because you're not going to have all the money when you go into the bank, you're not going to have all the money that you have that you started out with. You started out with $30,000, but you're buying a bunch of things right now.
Yeah. Okay.
Okay? So let's see what's next. Here, on June 4th, we had applied to the Nevada State Business for the Nevada business license here, which cost us $250, and we also had to pay for this city business license as well, so a business city permit, which cost us $100. So here we submitted to them a document, right, that we are applying for a business license where the owner is going to be Bob Mason. We're going to name it Coffee Cafe. It's a sole proprietorship. Okay, so the owner is Bob Mason. We put the date in here. Here's the address. This is the email that Bob's going to have them reach out to. There's the phone number, and so on and so forth. Okay, so he submitted paperwork to become to get permission from the state and the city to do business. Okay. So then that very same day when you applied for the business license and stuff, we also decided to open up a checking account. Okay, so here you go. You open a business checking account at Main Bank of Nevada. So here are the things that we bought. Okay, how much money do we have left? We only have $21,625 because we just spent money to get a license from the state and the city. We spent money to change the name, and we spent money buying a business. So in grand total, how much money do we actually have left? So again, we should have some kind of money left, right? If the furniture was $4,000, if the coffee brewer was $1,900, we established goodwill to be $2,100, and we also bought two licenses, so one for $250 and one for $100, and we also had to pay a court fee for $25. So that's $375 in grand total. So therefore, how much money are we actually depositing into the bank? We should be depositing $21,625 because that's all that we have. Okay? And because this is our investment into the company, That's going to go straight away into your owner's equity. So let's go ahead and properly journalize this transaction. It is June 4th. Okay. So I need to use my checking account because I need to know if these accounts exist in my chart of accounts so I can properly journalize them. Do I have a checking account in my chart of accounts?
Yes, we have the 21.
Okay, so we do have a checking account. It's 10-100. Okay, do we have a furniture account?
Furniture account?
Mm-hmm.
Furniture. Calendar. Oh, furniture, yeah. 13.
Okay, do we have a brewer account?
Yes. 15.
15.
150.
Okay, do we have Goodwill?
Goodwill. Goodwill, yes. 19,100.
And do we have license expense?
License expense calculated. I don't see it. Oh, this is like all the expense about the license and bank, everything. Business expense, insurance. So I don't see it.
It's in alphabetical order.
Um, so is it go to under the bank?
We're not under bank, we're under expenses.
Yeah, operating. So this is it count like the license, right?
Yes.
Okay. So we have driving, uh, advertising expense, bank, business expense, fraud expense, insurance, interest, labor. This one. Which one? License. Oh, license. Okay. 600.
Okay. So in this case, right? Now let's go ahead and so we do have the accounts in our chart of accounts. And then equity, do we have owner's equity?
Equity. Equity. Honor. Withdraw. Honor. Equity. Yeah. 3.
Okay. So now that we established that we have our chart of accounts, right? Now we need to question ourselves. Am I increasing my checking account?
Increasing my checking account. Yeah, because we have the 21.
Yes, we have money. We're putting it into our checking account. We're putting money into it. So we're increasing our checking account. And checking is an asset.
Uh-huh.
So therefore, are we going to debit or are we going to credit this account?
Increase credit. Debit, debit.
We're increasing a checking account, which is an asset.
Yeah, debit.
Okay. We bought furniture. What is
Yes.
furniture?
Furniture asset.
Okay. It's a fixed asset, right? So when we buy
Yeah.
furniture, are we increasing it or decreasing it?
Decrease because the furniture after a while is gonna be not worth anything, right?
No, but we bought furniture.
Okay. We bought decrease.
Okay, if I have zero furniture and then I bought furniture,
Uh-huh.
what does that mean? Does that means I bought? That means I increase, right? Why would I decrease if I started out with zero furniture and then all of a sudden I bought furniture?
Yeah. Okay. I thought because we bought it and now if we want to sell it or something, it's gonna be like down. That's why
Did
I
I
thought
sell it?
you.
Did I sell it?
Okay. No.
No, I bought it. So am I increasing or decreasing my account?
Increase.
Okay. What about the coffee brewer? Coffee brewer. What is that? It's an asset, right?
Yeah, it's the increase because we're gonna use it.
Okay. Sure.
Mhm.
And then goodwill. Goodwill is an intangible asset, so
Increase.
increase. What about expenses? I spend money. How do you am I going to increase or decrease?
Decrease because we spend money.
Well, not the checking account, Gerare. I bought a license permit.
Oh, increase because we're gonna be having like the license. It's make our account like more worth.
Sure.
Mhm.
We obtain a license. That means we spent money. That means we are increasing our expenses. Okay? What about equity? This is
Equity.
we started out with a $30,000 investment. Is that something that's going to increase my equity or is that going to decrease my equity?
Increase.
So how do you increase an equity?
Uh, we spend money and with equity.
Equity is when we invest money into our company. We started the
Oh,
company out with
decrease.
money.
Yeah, decrease.
You're not decreasing. You're adding value to your company, aren't you? You're investing your own money into your company. You had $30,000 to invest into your company.
So decrease because we put the money and we couldn't use this money. Correct?
No, you're increasing. Okay, if your business is right now holds a value of zero, right? And you take
Mm-hmm.
$30,000 and you're putting it into your company. Are you increasing or are you decreasing your company?
Oh, increase because we invest this money.
Okay, so what? How would you increase a equity account?
Equity. Mm, like when we put money and we use it, when we bought something and we sell it.
That's not what I'm asking you. I'm asking you how do you increase an equity account?
Mm, when we purchase like
No, I'm not asking anything like that. I'm asking you a very simple question. How do you increase an equity account with a debit or a credit?
oh, okay, increase debit
Why? Look at your accounting model. You're
because with
increasing
the
your you're increasing an equity account. So are you going to debit or credit the account? Where does the arrow point up? On the debit or the credit side for the accounting model for equity?
yes. I'm not very sure with this one.
Pull out your accounting model right now. Pull out your accounting model.
From my 1 second, I need to open from my laptop because I opened from the phone. I am at the school.
I already got it up. Okay, the accounting model. Okay, I'm increasing an equity account. So where does the arrow point for equity? Actually, equity. I'm increasing my equity.
A credit.
You're gonna increase it with a credit.
Yeah.
Okay, so let's go into our journal. Okay, we recognize we have a checking account, 10100. Okay. Okay. That's the first thing we're gonna do is we're gonna deposit money into our checking account.
Yes, this is better.
Gerari, is there any possible way you can go in a quiet room? We can hear everybody talking in the background.
Yeah, because I wasn't like they was with me. Now nobody here. I'm just by myself.
Okay. So you got checking. Okay. 10100. That's the account. And how much money did we put in there? Well, we put in $21,625. Okay. Next account is we established that we have furniture, right? Because we bought furniture for $4,000, right? When we bought the company, we bought it for $4,000. So furniture was account number 13,000. And we bought it for $4,000. Okay? Then we bought a coffee brewer, right? Which we coffee brewer, right? Which is account number 1510. For $1,900. Okay? We bought some goodwill, or we bought the business for more than what it's worth, so we gained goodwill out of it. So 19,100 goodwill. For 2,100. We bought some license and permit, right? Which was account number 6,600. And we purchased the city license, or for the state was 250 plus 100 for the city license plus $25 for the court cost to change the name. So in this case, I spent $375 on license and permit expense. Okay. And then last but not least, I invested money into my company. So therefore, I have owner's equity. Account number 30,000 for a grand total of $30,000. Okay? So, I need to put a description in here. You can say you purchased the business on May 31st, right? Total of $8,000. Okay? You bought state, I guess you could put NV and city license. No, let's do NV license for $250. You got the city license for $100. And then you got court cost for $25. Okay? That should be good enough.
Lina, I want to ask you. Yesterday, I tried to save all this document. I save it, but it doesn't give me like as I could write in the like Excel.
Because at the top of your window, do you see something yellow there?
No.
Okay.
Like maybe after the class, you could help me.
Okay.
Thank you.
Okay, so there you go. That's the first thing that we did here was we acquired a business, right? We opened up our bank account. Okay. So now that I journalized this, I need to now post it to my ledger because I need to have a running balance in my checking account. So how does the general ledger work? I'm going to tell you this to do this in the exact order that you see it in your journal. That way, it you can keep track of it much more easier. But second thing is so you don't skip around and accidentally forget to post something to the ledger because that will be the reason why you have discrepancies in your books. Okay, so the first thing here is we opened up our checking account, okay, on June 4th. Here, I'm going to say this opening balance in bank, okay, because we opened up our checking account. This post reference is going to refer to which spot in the general journal are you posting this transaction in. So then when in the future, let's say I'm missing something, I can take a look at my ledger account and be able to see, oh, okay, I opened up my checking account on the very first page of my journal, right? Because we're on journal page 1 right now. So that's JG 1, okay, for general journal page 1, okay? We increase our checking account by $21,625, right? So that means since this is my beginning balance, I started out with my bank account, with my checking account with 0. Now that I added money to there, I now have a debit balance of $21,625. Okay? And I need to do this for every single account that I see here because my checking account is not the only thing I'm looking at. I need to make sure that if I'm going to post to the ledger, I'm going to post to the ledger and post every single account. So that was the first account right there, checking. So that means I need to go to the next account, which is furniture. Okay? Okay, so I think it's here, furniture. Okay? 6-4, and then you could say purchased furniture on May 31st. Okay. How do I know that? Because I posted in my journal on here because I bought the business and that furniture cost me $4,000. So that means I have $4,000 worth of furniture in my books right now. Next thing is a coffee brewer. Okay, right here, coffee brewer. Right, you can also say the same thing. You purchased uh, coffee brewer number 1 on May 31st. Right, which cost me $1,900. Okay. Next thing here, I got some goodwill. So goodwill is gonna be close to the bottom here. So here's goodwill. Purchased business name. Okay. And we got it for $2,100. So whatever the way that you put it in your journal is going to reflect the same exact way in your ledger, right? If I debited my goodwill for 2100, that means in my ledger it should be exactly the same. I debiting my goodwill for 2100. This is the normal balance. The normal balance, I'll show you what you have to do for here, because when you buy things and you sell things, right, you're going to record it in your journal, and then you're going to post it to the ledger. So you're going to constantly be having some kind of fluctuation between accounts, okay? So that's that one there. Okay. So let's see what's next here. We bought some license and permit expense. So I'm going to go ahead and locate my expenses. All right, they're all in alphabetical order. Okay, so here you go. Let's purchase. Oh, we're a little too far. Here you go. License and permit expense. So we bought a Nevada license for $250. City license for $100, and court cost $25 for $375. Okay. And last but not least, we had an owner's equity. So we got to locate our equity accounts. Here we are, owner's equity, the very first one right here. We're going to go ahead and enter in our original investment. Journal page 1, and we're going to credit, because that's what it shows in our journal. We're going to credit our equity account by $30,000. So now you have a credit balance of $30,000. Okay, so that's the very first transaction I've done. Was I opened up a bank account. I have to backtrack because I gotta enter in all the money I spent. Okay. So then now that's done, I post it to my ledger. I can now move on to my next scenario. Okay. So here it says right here that you applied for a line of credit from Maine Bank of Nevada. Okay. So a line of credit is for instances like a means for overdraft protection. It could be extra money that you could use for a personal loan. Okay, so this is just money that we have like a reserve. Okay, so that's what the line of credit does for the Maine Bank of Nevada. But it is also based on a condition, right? You need to either do something in order for you to trigger this line of credit. Okay, we just simply applied. So is this something we need to journalize? Is this something we need to journalize? That we applied for a line of credit? Yes? No? In this case, we only simply applied for a line of credit. A line of credit, right, is determined based on your credit score, right? On how much you can be able to um, receive. So in this case, we don't know what the amount is. We didn't get approved yet because again, it's based on your credit score. So the bank is going to determine how much you're able to receive. So in this case, we're just simply applied. So there's nothing that we can do here because there's no transaction where we received the money or not. All we did was just simply apply. Okay. So here's the next transaction here on June 4th, so same day. We end up selling our furniture for $2,000 cash, okay? And of course, we requested for a new ledger account, and that is to be called, to represent the disposal, the loss on disposal. So, because we got rid of the furniture, right? We end up selling it for $2,000. We sell up all of it. So in this case, right, we got rid of the furniture because again, it came from the previous coffee shop. We don't need it. We can buy our own furniture, okay? So in this case, we got rid of the furniture and we end up taking a loss because how much was the furniture that we originally purchased? It was $4,000, right? And we only got $2,000 cash. That means we lost $2,000 somewhere. Okay? So in this case, I need to be able to journalize that I sold my furniture. I got rid of it. And I sold it for $2,000 cash. Okay? So how would I journalize this transaction? How will I journalize this transaction? Since I sold my furniture, right? I got rid of my furniture, meaning did I increase my furniture or did I decrease it? In this case, because I sold and I got rid of it, I no longer have my furniture. So in this case, I got rid of all my furniture. So therefore, I need to decrease my furniture because I no longer have it anymore. Okay? So that means I need to decrease my furniture by $4,000. Now in this case, I earned $2,000 worth of cash because I sold the furniture, right? So in this case, I'm receiving money, right? Which is an asset. And where's that money going to go to? It should go straight to my checking account. So in this case, it will increase my checking account by $2,000. Now, in this case, because my furniture was actually worth $4,000, right? That was the fair market value that I purchased it for, was $4,000. And because I'm reselling it, I end up losing $2,000 out of it. So I basically spent $4,000 to only gain back $2,000. So we need to recognize this right here, which is called the loss on disposal of asset. So let's take a look at my chart of accounts. Do I have a loss on disposal of asset? Because for sure I know I have a checking account and a furniture account, but do I have a loss on disposal of asset? In this case, I do 6,700. So that's what I'm going to do. I'm going to go ahead and skip a line because it's a new transaction. Okay, we're still on the 6. We end up selling our furniture and we received money, right? So checking, we increased our checking account because we received $2,000 worth of cash. Okay. We have to recognize that expense because we end up losing money out of it. Which was account 6,700. And because we got rid of my furniture, that's going to mean, am I increasing or decreasing? I'm decreasing my asset, so therefore I need to credit my account, right? And this case, my furniture cost me a grand total of $4,000. So in this case, what I can put here is loss on sale of furniture. Okay. So again, when I journalize, I must post it to my ledger because in this case, I increase my cash, but I should actually put in the money into my checking account. So that's going to be something I am going to have to make a deposit for. So in this case, okay, that's my deposits. So in this case, I am I received $2,000. Okay. So in this case, from sale, okay, in the amount of $2,000. Okay, for an amount of $2,000. Today is June 4th. Deposit slip number, do we have one? It doesn't really matter. You could use this as deposit slip number 1. Okay, and how much did I deposit in the bank? I deposited $2,000. Okay. So now I actually have the money in my checking account. So then now I can go ahead and update my ledger accounts accordingly because I increased some money in my checking account and I decrease my furniture, and I end up taking a loss. So checking account, I got sale on furniture. Right, we're still on our first page. We increased our checking account by $2,000, right? So in this case, if I'm adding money to my bank account, then this formula is pretty straightforward. This formula is going to basically give you a running balance in your checking account, okay? Now, if you follow the rules of how debits and credits work, right? Debits increase in an account and credits decrease. So that's the same idea here where we're going to take my ending balance, right? This is my normal balance right now. The previous balance that I started out with was 21,625, right? For every debit will increase my balance. At the same time, for every credit will decrease my balance. So this is what the formula is. You're going to take the previous balance, you're going to add any debits, and you're going to subtract any credits, okay? If you're looking at cell referencing itself, it's going to be up 1, okay, plus left 2 minus left 1, okay? So your previous balance plus your debits minus your credits, and that should give you a running balance. So then that means the next time, if I go ahead and use this little feature here where I could drag my formula down, so that means the next time, let's say I paid for something for $50, it will automatically calculate that for me right there. So then I never have to actually calculate this on a calculator, right? It will do it for me automatically for me. Okay, so in this case, it subtracted $50, right? If I went from 23,625 minus 50 gave me 23,575, right? It does the math for you automatically. Okay? And that's true for this too. If let's say I bought I paid for, no, not something. I gained more money. Let's say I gained a sale, right? And let's say it got me $1,100. If I type it in here and I press enter, it should automatically add the $1,100 to my previous balance. So here you go. Now it's increased my checking account by 23,625 to 24,725. So in this case, that's how we use Excel to do the math for us. Okay, so I'm going to clear that out because we don't need that. So that means for every single account that is an asset is going to follow the same exact formula. But when we arrive to different account types, so such as your liabilities, your equity, and your revenues, the formula is similar. It's not the same exact one because now we're dealing with a credit balance, okay? And credits increase, not debits. Debits decrease. So I'll be showing you that formula later on when we come across a equity account or a liability and so on and so forth. Okay, so here, that's exactly what we have now. We now have $23,625 in our bank. Okay. Then we're going to go to loss on disposal of assets. So it's very important that we do this in the exact order. So here you go. It's right under my license. Right? So we sold our furniture. Right? We're still in general journal number 1. So we end up losing $2,000. So that means that's $2,000 I spent for the company. And I lost it due to selling my furniture. right? Last but not least, I need to go ahead and go to my furniture account because I need to update that I actually got rid of my furniture. So this is where that formula is going to come into play, and it's actually going to change the number here. So let's see, furniture. So here it is. I purchased the furniture on May 31st, right? June 4th, I sold the furniture. Still on General Journal 1 here. And since I sold the furniture, I end up crediting, because that's what my journal says, right? My journal says that I credited my furniture account because I got rid of it. I no longer have it anymore. So once again, that formula, right, is going to be your previous balance, okay, plus any debit, so 0, minus any credits, which is the 4,000, which should give you an account balance of 0. Okay, that means there's nothing left. And that is that journal. Okay. So I'm gonna stop here to go on a break because it's 9:58. So let's stop here, take your 20-minute break, and then please